Okay, so today I want to go through the research I've been doing into Li Lu and more specifically why he is so bullish on Chinese stocks. I want to try and learn about his investing philosophy and whether his moves in China are something that we could also be doing. Later in the video, I'll go through his current positions and give my thoughts on each of his current investments, both in the US and throughout the world. All right, so let's go and find whether we should all be paying more attention to the Chinese market. Now, if you have Robinhood or Webull or a trading app like that, well, you most likely don't have access to many of the markets throughout the world. Now, that puts you at a serious disadvantage, as some of the best companies in the world are not in the USA. Look, I personally have investments in Japan, Australia, and looking at Chinese, Canadian, and British stocks as well. I can invest in these companies through my Interactive Brokers account, which, in my opinion, is the best and safest brokerage company in the world. Now, I actually have two brokerage accounts, the other with Saxo Bank, and they are really good as well. So go to the link to Interactive Brokers or Saxo Bank in my description, and I think with the Interactive Brokers one, you'll get $200 of Interactive Brokers stock when you sign up. If you want to follow the best investors in the world into international markets, well, you'll just need a good brokerage account. So speaking of the best investors in the world, let's talk more about Li Lu. Now, Li Lu runs Himalaya Capital and has a reported 30% compound annual return since 1998, which would put him in the same leagues as the greats like Warren Buffett. Charlie Munger personally entrusts his own money to Li Lu. That's how impressive Li Lu is. When one of the greatest and most successful investing minds of all time gives his money to someone to manage, well, that person must be probably the best of the best. Now, Li Lu's story is really fascinating. He was actually one of the leaders of the Tiananmen Square student protests, where he was organizing and participating in those hunger strikes. Now, before that, his mother and father were sent to labor camps in China during the Cultural Revolution, and he moved between foster families. Then while at university, he had to flee China because of his involvement in the Tiananmen Square protests. He luckily got out of the country, first to France and then to the USA. His reputation as a bit of a hero carried with him through into the US, where he was lucky enough to be awarded a scholarship to Columbia University, where he learnt English and got 3 degrees: economics, law, and business, all at the same time. So pretty impressive stuff. Now, Li Lu's first introduction to Warren Buffett was at a guest lecture at Columbia Business School in '93, where Li Lu almost didn't attend. Li Lu recalled that it was his second year of study, and his friend invited him to this guest lecture of the famous Warren Buffett, because Buffett was famous even in '93. But Li Lu, however, because English wasn't so good for him, he misunderstood and thought his friend said they were going for a free lunch buffet, along with an opportunity to learn how to make some money. Being a broke university student, a free meal, it was a good enough reason for him to go to a lecture. Funnily enough, there was actually no free lunch, but Warren Buffett was giving a talk. Li Lu stayed anyway, and this one event put him on the path to starting his investment career. Now, this all sounds very serendipitous, but I guess we all have something similar in our own lives. I mean, my dad used to read these investing newsletters when I was a teenager, and I was just super bored one day and picked up one of these newsletters off the floor and started reading it. And that put me on my investing journey. I guess my mind was open to investing, and I just needed something to come along and start me on that journey. It was probably going to happen eventually. Li Lu started his fund and lost 19% in the first year, which is a tough way to start an investment fund. He wasn't worried though, later saying, "In my view, the biggest investment risk is not the volatility of prices, but whether you will suffer a permanent loss of capital. Not only is the mere drop in stock prices not a risk, but it is an opportunity. Where else do you look for cheap stocks?" Now, hunting for cheap stocks is exactly what he was doing, and he struck gold investing in Russia. I find this story absolutely mad. So during the 1990s, the USSR collapsed and the region was going through radical change to capitalism. It was complete uncertainty. Many of the workers at the big companies in Russia were given stock certificates in the companies. Now, there was no stock market in Moscow at the time, so there was no easy way to sell these share certificates. And because the country was previously communist, most of these workers had no idea what a share certificate even is, so they thought it was this useless piece of paper. So this combination of a lack of liquidity, an absent marketplace, and the general uncertainty around Russia during this rocky period meant that these companies were trading at massive discounts. How massive? Well, Lilu explains. Forget about earnings. Just consider the assets on the balance sheet. At the time, the 5-year average for oil prices was about $20 per barrel. And on a per share basis, they were trading for as low as 1 cent on the dollar, sometimes half a cent on the dollar. So about 10 cents to 20 cents per barrel of crude oil. And that's not even counting the earnings from the company. It was just ridiculous. At the end of the day, these were still huge companies that held monopolies in the Russian oil and gas sectors with very strong balance sheets. Lilu invested in the company called Lukoil, a newly formed entity created by the Russian government, by buying shares from the employees who didn't know what the share certificate was and thought it was worthless. A few years later, the stock was listed on the newly formed Moscow Stock Exchange and now up 10x. Now look, let's be honest here. We are not going to be replicating this madness. It would be like going into a country that has collapsed and buying up assets, like going into Venezuela or something. And the people that did go into Venezuela had a lot of their assets taken by the new radical government. So I think Lilu was a madman in his early investing days. Now, after these early years of wild investments with spectacular results, Lilu had evolved into more the Munger style investing approach, running a concentrated long-only fund. And he is very, very good at it. Even with his negative 19% first year, his 33-year average is now somewhere around 30% since 1998. So he turned $300,000 into well over $1 billion. Okay, this is what Lilu thinks about investing in China. I think China is one of the best markets in the world if you are a value investor. In a sense, the market is still underdeveloped. It is not representative of the real economy in the same way as it is in the United States. The trading and investors are not as mature. There's still this mentality of faster trading and high turnover, which drives companies through this faster pace of boom and bust. This usually provides opportunities for patient investors who truly know the value of the businesses. He goes on to explain that there are two major tailwinds in China. The country is moving away from an export-led economy to a services economy. This grows the middle class of China and increases wealth in the country significantly. Then, many investment funds are growing fast and funding new companies. Banks used to do a lot of the funding into new companies. Now it's more competitive and more opportunities to get funding for young companies. So these two tailwinds of the growing middle class and the developing financial sector are the reasons why he's so optimistic about the future for Chinese equities and the Chinese economy. Here is what I can find out about Himalaya Capital's portfolio. The biggest holding at over half the portfolio is BYD, the electric car maker in China. This is the big bet on China from Lilu. My thoughts on BYD is that it is a very difficult business to understand, but Charlie Munger and Buffett both have invested in BYD alongside Lilu. Now, it isn't just an electric car maker, it makes batteries, mobile phone components, and factory products as well. This one for me is just way too hard for me to get my head around, and I'm not comfortable with it at all. Lilu must have put in years of work into this investment, which has paid off very well so far. I guess we could just trust that Lilu is smarter than I will ever be and just copy him into this investment. A very valid approach. So if he is ever buying more, I guess he thinks it is undervalued and that would be a good time to join in. Now, the next company is Micron Technology, and this is a popular stock amongst my favorite investors, Monish Pabrai, Guy Spear, David Tepper, Seth Klarman, Prem Watsa. They all have big investments in Micron. It was super hard for me to even understand it a little bit, and I probably don't need to understand it completely when all these brilliant minds have big investments in the company. I think it must have been undervalued when the price was between $35 and $40 about a year ago. Now at $80, $85, I think a lot of the upside has been achieved. I'm not exactly sure what the future of this company looks like either. Bank of America is next on the list. I know Bank of America well as I've actually just sold my position in the company. It was just really cheap when I bought it and the price has moved up a lot since I was investing. Still a good company, I just think I have better investment opportunities to move money into. Maybe selling will be a mistake, but I don't think so. A couple of the big tech names now in Alphabet, Facebook, and Apple. I like all of these companies. I've invested in Apple in the past and still have my Alphabet and Facebook stocks. All three of these companies are still growing and creating new areas for growth all the time. Google and Facebook have projects in many different fields that could be huge winners for the company. And Apple, well, it probably has the best brand in the world. We all know these companies, and if I had to pick one today that I had to buy, well, I think Facebook is the best value and has just a ridiculous amount of cash on their balance sheet. That's probably the best deal of the three. Alphabet, though, is probably my favorite company out of the three. It's just far more expensive. Then last on the list, we see Pinduoduo. This is really interesting. Pinduoduo is a Chinese e-commerce company that is growing at light speed. I've been asked a few times about Pinduoduo, but I haven't looked in detail into the company before. So I don't know much about it, but I did run the valuation through my intrinsic value calculator just to see if there is a bargain to be had. Now, I was pretty conservative with the growth rates, considering it is growing way faster than 30% right now. It's more like 100%, but I assumed that was pandemic related, so I slowed it down a lot. I used a big return rate of 30% as my margin of safety. Now, these numbers are in Chinese yuan, and it converts to about $65 as the buy price. Currently, it's about $130. Now, I'm probably being way too conservative here. If I reduce my big margin of safety and increase that growth rate, well, maybe it's actually a bargain. I'll have to take a look at the company and see what I think the future is like for them. I might have to do a deep dive into it, especially since Li Lu is invested. He is smarter than me, so there is obviously something attractive here. Something about Pinduoduo that I do know is that Tencent is actually holds quite a big stake in the company. So I know that with Tencent's backing and Tencent's investment power, Pinduoduo has probably a very strong future. Now leave me a comment on what you think about Li Lu's portfolio. I think it's great to study with the best investors in the world. It helps me a lot and gives me ideas for my own portfolio. It's like we have the best stock investors in the world giving us their best ideas. It would be insane not to pay attention. So thanks for staying to the end, and I'll see you in the next video.